The Nigerian Exchange All-Share Index, that is the NGX-ASI, the headline number that measures the average price of every stock listed on the Nigerian Stock Exchange, just printed 242,000. Investors in Nigerian equities have gained N156 trillion in market value in 4 months. That is not a typo. 156 trillion Naira added to the paper wealth of everyone holding Nigerian shares since the start of the year. This channel is not financial advice. It documents diaspora Nigerian research into investing back home, what works, what does not, where the friction is. Education shared openly. For most of us watching this from outside Nigeria, the NGX has lived in the back of our minds for years as a thing other people talked about. Uncles, cousins, the aunt who somehow has Dangote shares from 2008. That is shifting. So before going into what is driving the rally and what it actually means for diaspora wallets, here is the basics context. The NGX is the Nigerian exchange, formerly the Nigerian Stock Exchange, demutualized and rebranded in 2021. It is the main place where Nigerian companies list their shares, banks, cement, telecoms, oil, consumer goods. The All-Share Index, the number we keep mentioning, is essentially the running scoreboard for that entire market. When the index goes up, the average Nigerian listed company is worth more. When the total market capitalization, that is the combined value of every share of every listed company, climbs by N156 trillion in 4 months, something serious is happening. For scale, N156 trillion is roughly the size of Nigeria's annual GDP. The market has effectively added 1 full year of national output in paper wealth in a third of a year. Now, before anyone in the diaspora rushes to open a brokerage account, and we will get to brokers later, there is a translation problem we have to deal with first. Naira returns are not dollar returns. A 51% rally in Naira terms is not a 51% rally in CAD, USD, GBP, or euros. The currency moves underneath, and the currency has been moving for years. That gap is the single most important thing to understand about this story. So let us walk through it. The NGX rally did not start in 2026. It started after Tinubu, President Bola Tinubu, who took office May 2023, removed the fuel subsidy on his first day and let the central bank float the Naira a few weeks later. Before the float, the official exchange rate was being held at around N46 to $1. Once Yemi Cardoso, the current governor of the Central Bank of Nigeria, imposed since September 2023, took over and let the market clear, the Naira fell to roughly a third of that value over the following year. That sounds like a disaster. And for households, it largely was. But for the stock market, a devalued currency does 2 things at once. First, it makes Nigerian assets cheap in dollar terms. A bank with the same earnings priced in a Naira worth a third of what it used to be is suddenly trading at a third of the dollar valuation it had under the old regime. Foreign investors who had refused to touch Nigeria for years started looking again. Second, inflation pushes Naira asset prices up almost mechanically. When prices in the economy are rising at 20, 30, sometimes more percent a year, the Naira-denominated revenue and earnings of listed companies rise with them. Their share prices follow. So a chunk of any Naira return is just inflation pass-through. Real return after inflation, is a much smaller number. Now layer on what is happening in 2025 and into 2026. Banking recapitalization. The central bank told the banks to raise massive amounts of fresh capital, which forced names like GTCO, Zenith Bank, Access Bank, UBA, and Fidelity Bank, all the household names, to either do public offers, rights issues, or both. That brought new money into the market and put the spotlight on the banking sector. Banks are roughly a third of the NGX by weight. So when banks rally, the index rallies. Add to that the fact that the federal government has been issuing high-yield treasury bills and bonds to soak up excess Naira, but yields have started easing as inflation cools off. When yields ease, equities look better in comparison. Money rotates, the index goes up, and then there is the corporate side. Dangote, Aliko Dangote, founder of Dangote Group, Africa's richest man, with the cement, sugar, and refinery empire, finally has the refinery operating at meaningful capacity. Seplat Energy, one of Nigeria's largest indigenous oil and gas producers, listed on both the NGX and the London Stock Exchange, closed its acquisition of ExxonMobil's onshore Nigerian assets, and the share price reflected it. BUA Cement, the cement arm of BUA Group, the second largest player after Dangote in cement and a major name in food and infrastructure, has been printing dividends. Airtel Africa, the Pan-African telecoms operator listed in Lagos and London, has been a steady compounder. The NGX in 2026 is no longer the sleepy, illiquid thing it was a decade ago. So 242,000 on the index and 156 trillion added in 4 months. There are real reasons for it. It is not nothing. But here comes the part most cheerleader videos skip. The free float problem. The free float of a stock is the portion of its shares actually available for the public to trade, as opposed to shares locked up in the hands of founders, government, or strategic investors. On the NGX, free float for a lot of the biggest names is small. That means a relatively small amount of buying can push the price a long way up, and a relatively small amount of selling can push it back down. Thin markets move fast in both directions. The 156 trillion gain reflects share prices applied to all outstanding shares, not just the ones that actually traded. Mark-to-market wealth is real on paper. Cashing out fully without moving the price is harder. The settlement problem. Nigerian equities settle on what is called T+3, meaning when you sell a stock, the cash hits your account 3 business days later, not instantly. That is fine for long-term holders, but anyone hoping to day trade Nigerian equities from abroad with same-day liquidity is in the wrong market. The CSCS problem. The Central Securities Clearing System, CSCS, is the depository where every Nigerian shareholding is registered. To buy or sell on the NGX, every investor, diaspora or local, needs a CSCS account tied to a BVN. The bank verification number, BVN, is the 11-digit identifier every Nigerian bank account is linked to, and every diaspora investor running through this process discovers that the BVN is the wall. If this is making sense, hit the like button. It helps more Nigerians abroad find this. Subscribe to the placeholder. Now to the part that actually matters for those of us watching from outside Nigeria. Whether you earn in CAD, USD, GBP, or Euros, Here is the math you have to do before treating any quoted Naira return as gospel. Take the 2025 number that gets quoted everywhere, roughly 51% on the NGX-ASI in Naira terms. To translate that into dollars, you need two things: where the Naira to dollar rate started and where it ended. If the Naira slipped meaningfully against the dollar during that period, your dollar return is smaller. If it held its ground, the dollar return sits much closer to the Naira return. There is no shortcut. Run the FX rate at the start of the year and at the end and divide the Naira return by whatever the Naira loss. That is your real foreign currency return. The math is straightforward. The discipline is doing it every single time before getting excited. Same exercise for the 2026 4-month number. M156 trillion gained in market cap is a Naira figure. Whether that translates into a dollar gain depends entirely on what the Naira did against the dollar over those 4 months. If the currency held roughly stable, most of the rally is real in foreign currency. If it slipped, some of that gain evaporates the moment anyone tries to convert. Always check the current rate yourself before sending money home to buy stocks. The friction list ranked by how much pain it causes diaspora investors trying to actually participate. Number 1, the BVN. Nigerian banks need a BVN to open the kind of account that funds a brokerage. Getting a BVN as a diaspora Nigerian historically required physical presence in Nigeria for biometric capture. The CBN has, over the last few years, pushed the non-resident BVN to let Nigerians abroad enroll without flying home. It works in theory. In practice, the process can take weeks with the friction depending on which embassy or partner agent the application goes through. Number 2, the broker. Once a BVN exists, you need a stockbroker registered with the NGX to actually place trades. Stanbic IBTC, one of the biggest brokers and pension fund administrators in Nigeria, originally a banking subsidiary of South Africa's Standard Bank, has the cleanest mobile app most diaspora users report. Cardinal Stone, a mid-sized investment bank and brokerage based in Lagos, and Meristem, another well-known indigenous broker, both onboard non-residents. ARM Securities, the brokerage arm of Asset and Resource Management Company, one of the oldest asset managers in the country, is another. The onboarding flow varies. Some require notarized documents. Some require physical Nigerian address. None of them have made this as easy as opening a retail brokerage account back in your country of residence. Number 3, funding the account. Sending money into Nigeria to buy shares is not a one-click affair. Most diaspora investors use a domiciliary account, which is a Nigerian bank account that holds foreign currency and then convert from there. Conversion rates eat into returns. If the friction of getting money incurs 2 to 3% in spread, that comes off whatever your equity return is. Number 4, the NRNIA option. The NRNIA, the non-resident Nigerian investment account, is the specific channel the regulators have set up for diaspora Nigerians who want to invest without dealing with the full domestic banking apparatus. It is improving. It is still not frictionless. Number 5, taxes. Diaspora Nigerians pay tax wherever they are tax resident on global income. Capital gains and dividends from Nigerian equities can be taxable both in Nigeria, though Nigeria's capital gains tax on listed shares has historically been 0, with various exemptions.